Clark from Small Talk Daily Research. We have Ashraf Mohammed from the Sycamore Fund, and in a moment we will also have Bright Kumala joining us from Vestat. Lindsay Williams, as ever, my co-host from strictlybusinesspodcast.com, and this is a hot stock session. So we're going to be looking at the hottest stocks in the universe, that's both local and global, and we're going to be drilling down into the depth and breadth of the expertise on this panel. The first thing I think we have to chat about is Regensen, or I'm not sure how you pronounce it, Simon. I saw you coming out today with some content. Rengen, can you take that forward?
Renergen, and Anthony's perhaps even more of an expert than I am. They had an announcement out, Bronwyn, and thanks for the time, yesterday just ahead of the market open, and that followed another announcement they actually had on Tuesday. In essence, they are finding helium hand over fist. When someone now asks you, where do we find helium on planet Earth? The answer is, surprisingly, the Free State. And they had a 620% increase in terms of the helium reserves under the ground. They had some flow tests which they announced on Tuesday, which show significantly improved levels of flow of methane coming out of the ground. So, just good news left, right, and centre. That said, they'll have phase 1 up this year. Then they've got to get phase 2 up and running, which is about another 3 or so years away. So it's time until they get the major profits there. But it is a really impressive find. And so far, everything's just going, frankly, better than expected.
Anthony Clark, you know this one as well. And apart from putting it in balloons for those parties for which you're so famous, what is helium used for? Why is Renergen suddenly so hot?
Yeah, hi Bronwyn, hi Lindsay. Thank you so much for the opportunity. I'll tell you why helium is so hot. I know many people use helium, as you know, for party balloons. But in the last 10 or 15 years, with the rise of technology, it has some surprising uses. I'll give you some direct examples. If you go into hospital these days and have an MRI scan to check your entire body resonance, the magnetic field that you go in has to be cooled by liquid helium to make the magnetic resonance actually work to give you an MRI scan. The proliferation of data centers globally, which now stores all of our information in the cloud, which has seen a surging market, they generate a huge amount of heat. Most of those data centers tend to be cooled with liquid helium. Now, why helium? Because helium doesn't explode. It's not toxic to the human body, apart from giving you a squeaky voice. And it's also used, as you've seen, in the space exploration industry, where the multi-billionaires Elon Musk and Jeff Bezos are racing to the moon or Mars. And every rocket launch, as an example, uses between 9 and 11 tons of helium to cool the equipment down and pressurize it. So it's become the technological gas of the moment. And as Simon rightly says, there are huge quantities sitting right outside of Velcom.
And it's probably going to become a takeover target. I don't know, Simon or Anthony, just follow up on this one. It surely must then, because it's such a scarce commodity and it's found in the Free State, someone's going to be circling this company. So is that one to watch?
From my perspective, I'd say yes. I've gone on public record stating I do not believe this company will be in existence in about 5 years' time. And I'll give you a very brief synopsis. From a presentation given yesterday, which Simon has alluded to, about the enormous reserves increases in helium and liquid natural gas or methane, the company itself, with a 5 billion rand market cap, has to spend a minimum of 12 billion rand to get the project up to some form of commercialization ahead of a 2024 commercial offtake agreements. Now, if you're a major international gas company, knowing that there's this sizable low-cost deposit sitting in the Free State, which you can actually drill down to 300 meters and extract a world-class deposit, and more importantly, in these times of ESG, where social investing is very important, the gas in the Free State is amongst the lowest carbon producing gas in the world. As an example, the gas from Qatar is 335 times more CO2 is emitted for every kilogram of helium produced compared to that in the Free State. So I would imagine in due course, given a huge capital commitment and the commerciality of this project, some major international company might knock on the door and take this out for a very, very fancy price. And I would lay a little wager on that happening within 5 to 7 years.
Well, that sounds very, very hot, Anthony Clark. Is anybody else going to give Renogen the hot vote in this round as we close out on that discussion? And in fact, does anybody else want to come in on Renogen before we close out on the helium opportunities and the potential takeout, as Anthony says, 5 to 7 years out for a very handsome price?
Yeah, Bronwyn, I'll come in there if I can. It's Garth here. So thanks very much for the opportunity and good to chat to all of you again. I don't have anything much to add in terms of the technicals and when I talk about the technicals, I'm actually talking about the deposits and the helium gas and what have you that Anthony's very well explained to all of us. I can just look at it purely from a trading perspective as a stock, and obviously the stock has gone absolutely bananas the last couple of weeks. It's had a huge run up through October and still running now into November. And all I'll say is I think it's a fantastic story. It's an amazing story. There's a huge amount of promise there, as has been alluded to. What I do think one just needs to be cautious of is I have a sort of a saying that the noise is always the loudest at the extremes with everything. And in the short term anyway, the noise around the stock is very, very high at the moment. So I would just say if you're a listener right now and you don't own the stock yet and you're suddenly thinking it's smart to rush out and buy, you might be a little bit late to this party in the short term, and you might want to just wait a bit and see that the price consolidates a little bit, because the reality is that yes, the reserves are there and it's a great story, but it's going to cost a hell of a lot of money to get it out of the ground still, and to actually get this project really doing what the promise is for the longer term. So yes, longer term looks very exciting, but short term is very, very, very bubbly at the moment.
Garth, a note of caution. Thank you very much for that one. Let's get back to reality now. Bronwyn, we'll talk about elections and other things later on, but let's continue with the hot stocks theme before we get into that, because one of the things I've been looking at is the fact that retailers have suddenly come to the fore. I keep on seeing stock exchange news service announcements about this company's taken a meaningful stake in this asset management company has taken a stake in this retailer. And you look recently at Massmart, the performance of Massmart, famous brands, Mr. Price and the grocers after their results and their trading updates. What I want to ask you, Ashraf, first of all, is this a retail recalibration after the terrible couple of years nearly that we've had? Is it a reset just to maintaining its equilibrium? Or is there a genuine retail resurgence in a country that is 66% of its economy is based on consumption, Ashraf?
Well, Lindsay, the restructures that have happened within the likes of ShopRite, Massmart, Truworths, the Foschini Group, and to a lesser extent Mr. Price, has played its part in that process. And I'm sure you saw this morning the SENS announcement from Truworths that earnings are going to be slightly lower over the comparative period on a quarter-on-quarter basis. And I think that's going to be temporary, but these companies have right-sized their balance sheets, they've sorted out their problem areas, and they're now due for a re-rating. The other thing to bear in mind, and it applies to all SA Inc. stocks, is that foreigners have been net sellers since the end of 2019, quarter on quarter. So South African stocks are looking cheap, even relative to other emerging markets, and definitely a lot cheaper compared to their developed market peers. So I definitely think SA Inc. stocks are due for a re-rating.
So, Bright Khumalo, let's bring you in here, otherwise known as Dividend Puppy, and let's start with...
means that it's not just a blanket buy anymore for commodity stocks, and this is terribly, terribly important to South Africa, especially on the eve of the midterm budget policy statement, which is also next Thursday because of income, obviously, from taxation. What are you thinking about the commodity prices at the moment? Have some of them fallen too far? Is there still more to come? What's your view?
It's a great point, Lindsay, and I think so. If you look at the energies, which is your oil, your coal, my sense is they had overrun. I mean, oil, Brent, got to around $86-88 a barrel, didn't make a heck lot of sense. I appreciate supply challenges, so bottlenecks and everything, but those prices never made a huge sense. And coal as well, in particular in South Africa. I mean, we got Fungela saying that their problems with Transnet in terms of exporting, they've been essentially having to stockpile coal. They're now running out of space. November, they run out of space to actually stockpile. So they've actually got to start cutting back on production. So the energy side, not thrilling for me much at all. But we're certainly seeing agri, the prices are remaining fairly elevated. We've got white and yellow maize at 3,300 and change, and yellow at almost 3,600. We've still got soya at 7,300. We've got sunflower seeds at almost 11,000, which is, I stand correct, but I think it's an all-time high for it. But what we're seeing there is input cost increases starting to kick in. Obviously, farmers are using diesel. They're using Eskom. So they're going to see some squeezes on the margins. The space I'm still liking is the PGM space. We've seen sort of rhodium settle around $13,000 to $14,000 an ounce. We've got platinum at about 1,000, currently 1,047. Palladium 2,045. They've fallen. They've pulled back a bit. I think the market's got over ahead of itself. If we look at results to June, that was the best 6 months in the history of PGM miners ever. The current 6 months, which to December, is frankly going to be the second best 6 months. And we tend to focus on rhodium, for example, at 30,000, but that wasn't the average price for the 6 month period. The average price was closer to 22, 23. So they're about 10 or 15% down the average for this 6 months compared to the previous 6 months. And yet the shares, to Garth's point earlier, overshot earlier in the year, but I think they've come back to probably too much on the downside. And of course, PGMs, the point to watch there, the silicon chip production. When can vehicle manufacturers get back to full capacity? The demand for new vehicles is there. They simply can't produce. We're looking at probably in the region of maybe 12-15% less new vehicles being produced this year, not because consumers don't want them, but because they can't get the chips. And your average fancy car these days comes with over 1,000 silicon chips in it, everything from your radio to your windscreen wipers to your Apple Play and etc. So I'm still quite liking the PGM space. I don't think it's necessarily going to be a quick turnaround, but certainly that's one I like. As I said, the energy, I think prices have got more downside, and in the agri, I think input costs might more than anything be the challenge going forward.
So Simon, before we let you go off PGM and Anthony Clark, I'm coming to you in just a moment, but when you say PGM space, give us an entry point here in terms of the hottest stock.
So my preferred is Sibanye-Stillwater. Neil Froneman has been doing deals like there's no tomorrow. I mean, he announces a deal on a Monday and does it on a Tuesday. But it's just $1 billion, right? And I say just $1 billion, but that's what they made in EBITDA profits in a quarter. So literally 3 months of profits. He goes and buys a couple of mines down in Brazil. I worry about the big deals, but Froneman certainly has the reputation for it. He's certainly moving into what he calls the green metals. So for me, it's Sibanye-Stillwater is my preferred. And at the current
and we keep hearing.
Yeah, 50.
Price point. Give me the price point there.
Yeah. I mean, I think the current price at just under 55 is a perfectly fair entry price. I was picking up, I've held it now since for about 2 years or so, but I was picking up some in the sort of lower 50s, but even at around the 55, I think if you've got a year or two of time, I think the price is quite reasonable.
Well, anybody who listens to this show should know that Sibanye-Stillwater is regularly a hot stock. And of course, Neil Kruger, who's usually with us from Kruger International, just can't get enough of telling us how hot it is. So let's move now to Small Talk Daily Research. Anthony Clark, you gave us obviously that view on Renogen. What else are you watching right now in this space, the small medium enterprise space, where we could see 10 baggers?
Yeah, Roman, I think you know, but I love special situations, and the market may be contracting in terms of JSE listings, but there's lots of deals going on behind the scenes. And it's just anticipating what's coming next that could potentially be the winner. And one I've been talking a lot about the last few months, and even wrote about for the last few months, has been York Timbers, which was an old plantation company up in Sabi, which had gone nowhere in 10 years. The share price was down 45%. There had been no dividends paid, and basically the company was a bit of an old wood chip. And then a new activist shareholder comes in late July. The share price runs to R3.90, and in the next 10 days, we have a very important annual general meeting going on, where we could see some significant changes to the board and a new CEO appointed. Now, the reason why I'm intrigued is the share price today is trading at R3.85. The net asset value is about R9.30. And given the unprecedented construction boom we have seen in this country post-COVID, the underlying operational inefficiencies in York meant they didn't capitalize on a surging demand for wood and timber-related products. Now, the new activist team wants to sort that out. They've got some really interesting assets in terms of the only plywood factory in this country, which could be worth R1.5 billion by itself. Some great forestry assets and a very fast-growing agricultural interest. So at R3.85, with a juicy discount to net asset value and potential management changes on board, I wrote in a Financial Mail article last week that I could see the stock going to about R5.50 in the short to medium term as all of these start to emanate and transpire into the marketplace. And the market loves nothing more than change. Change is often good. It is often a little bit, heeded by the market. But in this case, we could see some sawdust on the floor and lots of good growth coming from new saplings.
That's very nicely put, Anthony. Let's go to Garth now. Garth, one of the things I wanted to develop over the next few minutes is something that you brought up in your first answer, and that was, it was essentially saying that at the top you only hear the good news, and suddenly when all the good news runs out, then the market has topped, and at the bottom you only hear the bad news. You're a technical analyst. You obviously keep in touch with fundamentals, but mainly you look at the graphs, you look in your crystal ball. Are you getting slightly worried? Because I've been talking to a lot of asset managers over the last 2 weeks and asking them about the risks and opportunities in the new year, which is almost upon us. Are you starting to get some flashing warning signs?
Lindsay, I mean, you're right. I think what I said is that the noise is always the loudest at the extremes. And what that means is kind of what you alluded to, that when you get to a very sharp peak, you'll hear it all over the news and on Twitter and on covers of the Russell 2000 in the US, which is the small caps in America. And that index has just broken out, made a very powerful bullish